Hello, hello, hello. How is everyone doing? How is everyone doing today? Hope everyone had a good trading day today. Not seeing as many comments as normal, but I'm sorry I was a bit late starting. Camera issue. Started up my streaming software and I wasn't on it, which isn't a problem. I don't need to be on it, but it was a little strange. Hey, John. I feel where we were here. I was here. Bob was even here on the morning stream. Where were you? The morning stream was here. Did Apple form a double top on the 1 hour daily chart? Remind me after we get through some other stuff. VIX is doing the same price action of 2008. What specifically are you referring to, Rich? Again, that's a very nebulous term. The same price action of 2008, the beginning of 2008 and the ending of 2008 were very different. Anybody feel they missed the bottom? That's the point of a bear market rally, George. And stop worrying. You're not going to call the bottom anyways. Even when we do eventually get to the bottom, you're not going to call it anyways. You're not going to bottom tick the market. Again, worry about taking the chunk out of the middle. Worry about when the probability shifts to your favor. Again, you can always put on trades. We had aggressive buys, but then it's when do you unwind them. You know, if you think it was the bottom, statistically it doesn't say it's the bottom, but if you think it's the bottom, you hold them longer. Hello, Coco. Hey, Christoph. Good evening, Anissa. How you doing over in Europe, everyone? How are my European friends doing? You're not alone. Tech problems here too. Sorry to hear that, Patrick. It's been a doozy like of 3 weeks now. But you know, yesterday we had the dual internet, a primary and a backup, and both of them having problems at the same time. And then today I start to live stream this afternoon. I even rebooted midday and everything to clean up everything. And then I start up my streaming software, and the whole profile's corrupted. Ah, happy Wednesday, Connor. So I can't even talk now. Yeah, just run with the herd. Now, again, the band played on. Keep trailing. Keep trailing. Hey, Eric. Keep trailing. Remember, bear market rallies can be also your most shorted. What's your most shorted? Goldman Sachs most shorted index up 11%. 11% like in the last few days. The most shorted, and that a lot of that is complete garbage and wasn't even at, it was still at ridiculous valuations. That's the market we're in, and that's the market you go with. What do you mean, where's Bob? Bob's never here on Wednesday. And Bob won't be here tomorrow afternoon. He's got a conflict. That's why he should be on tomorrow morning. Yes, his target did hit today. And I can show you for anybody who wants to know, because we trade a lot of the same things, how he got his target. We might use targets slightly differently, but I can show you exactly, again, if anybody wonders how he came up with his target, because it's real easy. It's the end of the clear path. We had this market's just fantastic. This is also why I like to gauge sentiment. This is also why I like to gauge sentiment. But before we get that, please do consider subscribing, ringing that bell, and hitting the like button. Longer term subscribers, please come back and leave some comments. Please, I could really start using more comments again if we want to get this wider distribution, unless I can always take it private or just stop altogether, because if I get too aggravated and we don't get to 5,000 subscribers, I might just stop. But that's another statement, because all I ask is for some comments. Besides the spam bot ones, not the ones during the live stream, the ones that pump still crypto. How do I make all this money in crypto overnight? Well, I'm glad you asked. Oh, brother. Now, here's what I was talking about with, so you had S&P Global Composite and Services missing, and that was the final number. Remember, the preliminary ones from before missed also. They actually came in slightly better, but still dropping below that 50. So everybody's like, oh, Fed's got the economy's getting worse, recession, not a recession. and they've got to pause or pivot or whatever. And then we get ISM completely blowing it out to the upside, and then it's like, see, it's strong, so we got to buy. But wait, you were buying because the Fed's got to pivot or cut? No, now it's strong, so we got to buy. It means any information, when you see this, anything's being used as an excuse to buy. It doesn't matter whether it goes with the narrative or against the narrative. The narrative flips like multiple times during the day. And then the Fed, in my book, the Powell, if there had any remaining credibility from his last thing when he said we're going to get data dependent and we're not giving guidance, that completely destroyed any credibility. We've now had multiple Fed speakers, even today trumpeting. We had Kashikari today. We had Evans again. They're saying, hey, we're still hiking. We're still hiking 50. If data comes in stronger, 75. Kashikari, we're not cutting. Probably we're going to go and hold at some point, but that's next year. Neutral rates higher. I think that was Evans. Again, I'm following all these. It doesn't really matter, but the market's just shrugging it off. The market's like, yeah, whatever. Yeah, whatever. Let's just buy it. Market's getting ahead of itself. Yeah, whatever. Mark is actually good. This is actually good for sentiment. Sentiment back to neutral territory from bearish territory, so that's pretty good. Crude dropped with the crude oils coming out today. By the way, tomorrow we got the Challenger job cuts at 6:30 minor. We got continuing jobless claims and initial jobless claims. Again, I think the number is 1456 or 1465. I'll dig out my paper, but just watch. It's above 1450. Patrick has the number. Patrick will put it in chat. And then we got more Fed speaks. But the Fed speaks are being shrugged off. Nobody's listening. Everything before it's don't fight the Fed. Now it's fight the Fed. The Fed's saying, hey, we're still hiking. Everybody's like, you aren't. So we're in rally mode. Mega caps up big. Everything's up big. Chips up except for AMD. Walmart announced a ton of layoffs after the close. A lot of corporate layoffs. Remember, they guided horribly, and now they're following through with the layoffs. Oil taking it in the shorts. But everything else pretty much across the board. A lot of bullish price action today. This is creeping back up with just a 25 basis point from this morning. So the market's just completely shrugging off what the Fed and the Fed speakers are saying at this point. Still I don't know if this updated. Let's see, 40.51. Let's just see where we sit. By the way, after I know eBay was up. Adjusted earnings, Lucid was down, eBay was up. I did not look at Marathon Oil. What do we have for tomorrow? If anybody's trading Alibaba, so I'm going to be watching Kellogg still for inflation stuff. ConocoPhillips, but it's going to be interesting if they beat with oil breaking again that key level to the downside. Could actually trigger the massive double top this week. I don't know what else. I'm not looking at a bunch else tomorrow, but if you are interested, let me know. So is there any? You just have the meeting coming, the shareholders meeting coming up for Tesla. You can hit or more with clickbait. Stocks always go up or running all noon times higher by ARK going to the moon. Yeah, but that's not me. And that won't last subscribers. People just, I'd rather get to, you know what? We get the trickle in subscribers when we got people that stick. Continuous drive scans. There we go. 1456. That's the key number. Bad prognosis with ignoring the Fed. It's going to get interesting. It's going to get interesting until then. Higher. I had eBay on the chart. Hold on. Let me get the S&P. Interesting little move into the close. Interesting little pretty abrupt reversal. I had the minor harmonics on there, spiking through at the very end of the day, and then quick reversal. But no strong topping pattern just yet. No strong topping pattern just yet. I am just going to go with now the forward minor harmonics. Again, if you're already long, my book is to trail. And for tomorrow, 41.81 minor, but major is 41.91 to 42.01. I said Bob's target, remember, was this key open, which is the end of this clear path move. This was the clear path move, oops, on the daily. And this is where it ended, right here. That's exactly where he got his target from for the trade. And now this is the major consolidation area. So a little sideways correction. Remember, there's two kinds of corrections. This was a pullback correction. This was a sideways with the rising 8. That's why I was leaning towards bullish going into today. And you got the breakout move to the upside. Still got divergent setups to the upside. So I am cautiously bullish. Can't get overly bearish, though, until we start getting below. Right now, it's around about 40.75. Anything to the that would be just a minor bearish play. Let's see. Let me get to individual stocks after we do this. That's what I'm watching for. Overnight, though, I'd be keying off the 1 hour rotation zone and really into there about 41.43, 41.430, 41.40 to 41.43. You got this key resistance breakout area. We have this clear path move, but that's your key stopping point. Then below that, you don't have a lot of support. So that's where I'm keeping an eye if we really, that would be a short-term bearish mode. Why? Because you're against the 4 hour rotation zone. The warning sign again is start getting close below 41.05, and the breakdown zone based on the daily now is back at this 40.80. So that's where we sit there. NASDAQ going through this 13,214. My next minor target is 13,363. Next major target area 13,556 to 13,605. The key support level sideways correction again. Key support levels coming about 13,825. On the bigger term, so any pullback there is still just a pullback. And you see the minor support area is in the 4 hour rotation zone, 12,985. And overnight support area I'd be watching. Minor would be 13,200. Major would be 13,100 to about 13,90. Dow, we had this little double that completed, a little pause back and forth here, right, with all those numbers coming out, and then just the resumption breakout. My next level is above this 32,700, and then into the consolidation area. So that's where we sit with that. Dow major support is 13,324. We should still statistically favor this 33,018 to be exact because we got the close above 62.5. And we are sitting there with the 87.5 at the 33,018. So in order to do the minimum statistical odds favor is the hitting that target. Russell, again, my target next target area is about 1918 to 1923. So that's what we'll watch. Above there, then you have to start doing the reverse harmonics. For a number of these markets, based off of this thing keeps chugging along, I wouldn't be surprised to see them hit the 200-day. So back the 200-day, and this is the major area of next key major reversal zone. I know it's a wide area. We could fine tune it once we get in there. But the 200's right in there also. So if we keep up the go-go markets, this could easily hit the 200 on the S&P, the 200 on the NASDAQ, which is in the major. Here's the major reversal zone. And even the 200 on the Dow, which is in the major reversal zone. So could you still hit this on continued up moves? Remember, we're into August, which is thinner markets. We don't have anything till Jackson Hole coming up end August, and the next Fed meeting is until the third week of September. So theoretically, even after a pullback, could the market still juice up these 200s? Yeah, easily. I can tell you there won't be a head and shoulder on Tesla because it's not reversing a move. And if you're talking a major one, we'll take a look at that in a second. The DAX, by the way, finished the double, so another double to completion. Then coming up to 13,634 harmonic. Next one is 13,703. We're in the rollover zone, but don't ignore on the DAX continuing to march higher. Do not ignore this gap, which is 13,750. And again, cycles are at the top, but this thing can keep marching on. Notes, actually, this was fascinating. Notes, even with the bullish today, bullish reversal in notes, coming back down, just hitting below this key support level and into the rotation zone, but going back up. So that was very interesting. Also, this did trigger a 4-hour technical buy pattern too. So off a reversal in the, so that if it wasn't already long from the bigger pattern, this was a pullback entry. Again, the stop is much lower, so even if this reverses, but if you're trying to play this with a tighter stop, it would be a stop. I'd actually keep it right below, not just today's low, but right below the 50. So that could be because your reward to risk, if you were playing for the full big picture, you have very small risk and a huge reward. Your reward to risk ratio is massive on that if you were playing something like that. Crude, breaking down, retesting these lows from back at the 14th of July. Still, the rotation zone heading down. Going to be watching. We got 2 days left in the week to see if this weekly massive double does trigger, but it is triggered on the daily. Remember, even with these dips before, it never triggered on the daily. This is the official trigger on the daily. I like to watch it on the weekly, and these will be pullback zones then for me. And they could always be shorter term trades. I'm a little still with everything going on, little hesitant to go really short, other than short term short with this, and then playing down to some of these key levels longer term, especially still in hurricane season and stuff going on there. Natty gas, nice little reversal, a bullish reversal buy right here with a percent B buy and a rotation zone buy to the upside. So that is little key there. Little bullish move now. What am I watching for? This is where I like to put on the reverse harmonics, target area 862 to 893, then a close above 893, then continuing higher. So you can trail up, and then that's the way I like to do it. And then if we keep going, continue with a smaller position or add back onto it. Gold, finally getting this little pullback area. This, I actually changed contracts. That's why this contract, because I have to do the podcast again this Friday. This would fit in the rules of double bottom, but it's not reversing enough of the move. But still, this key peak high will gets me into a short-term buy above this 1789.40. That triggers a short-term buy with a run-up pattern and a stop below this 1770 area roughly. Dollar index was yesterday was, as I said, was the aggressive buy, and today a little follow through still. Stop raise areas 107.02 and then 107.53. A close above 107.53 is the continuation play, and this more aggressively based off where it's going is moving up a stop. VIX coming down. This is in double bottom territory. So that's the only thing I'm watching. I'm just putting on the aggressive targets for now. Just so we're reminded, I would actually use the conservative targets for this, but that's where we are in case we get above 2468. Again, that would trigger then a bigger breakdown pattern. But that's what I'm keeping an eye on there. Let's see. Bitcoin still holding in the channel, holding with the flat rotation zone, but and cycles at the bottom again on the daily. So if we push again higher, we're back into the upper channel area and then 25. But nothing great. I know we had Tesla Tesla, we do have a little 4 hour. It's a little sloppy in here, but 4 hour potential double top, and that would be triggered only on a closing basis. And that would have to be a 1 hour or 4 hour close below on a close below 878. Otherwise, we're still at the target area 940, then 953. Then, as I've discussed this morning, the next major target is 976, then roughly 1019, but still no close above the 62.5. I saw we had a question on Apple. Apple, which did hit the second target on this double bottom. So second target is hit. The final target is 170.87. And we are closed above the 62.5. And then the target is 176.33. So those are the Apple targets to the upside. You asked if there's a double top. No, this is not a double top. These are way too far apart. The only short-term bearish thing, I mean, I'm not even going to bother. I mean, there's no topping pattern even that low. But the only short-term bearish thing would be if it got back below 159.25 roughly. That would be back below the 200, back below the daily rotation zone, and you have a gap fill play. So other than that, there's nothing bearish yet. Can you get a pullback? Yeah, your minor pullback level is this breakout area right now. Your minor pullback level, and I just watched the 4 hour rotation zone, see this breakout area at the 62.5% harmonic, right in front of this 12.5% retracement harmonic. So your pullback area would be 162.60. Does the head and shoulder count on a monthly chart for Tesla? Yes. On a monthly chart, yes. Again, this is where if you ask a question, you have to put in the time frames because there's so many people who ask at different time frames. Yes. That is, and how do we vet it? Well, let's just vet it. Let's just verify that the targets work. So from the head, I hate the double heads, but they're slightly lower probability. We don't know where the neckline's going to break. Okay? I mean, I'm going to move the neckline up here, just take a guesstimate area, you know. Let's just say it broke over there. Yes, because your first and second targets are within the move, and technically your third target, but it would be only a first and second targets, and I'd be focused still on that second target. But that, you know, if it comes up here and really gets up in this area again, it would be off the table. But yes, that technically does qualify because it's reversing this move and you have a first and second target. So yes, thank you for clarifying, John, on the monthly. Does NG look like, oh, I think I covered that. NG, oh, sorry. I'll just go back. I'm catching up with comments. Yes, NG, this is actually an outside bar key reversal off the daily rotation zone and a %B buy. You just have to be a little cautious. Daily cycles at the bottom, weekly cycles at the top. That's why I'd be more aggressive with a stop level. But yes, that is, and you see here returning to that weekly rotation zone and now rotating back up. So yes, that is Christoph, you spotted that. Amazon now 120p ratio. I'm telling you, but we're back in party on markets. We are back in full party on markets, and fine. We'll get there. We'll get there. I've been through so many bear markets. Let's see, where is it? Yeah, 120. 120, baby. These are going to be setting up for some great short opportunities again. That's actually why I love bear market rallies, because you can trade them to, you can trade with the trend. And then when we get the rollover move again, you get a lot of fantastic setups. I mean, I'm not even going to get into that. Hey, Lauren. Target 969 for Tesla, I think. Didn't I? I have 975. I have 975 in there. That's the key breakdown zone for the higher target. Can you look at CRM, Workday, and Adobe? Oh, come on. There we go. CRM. Nice little Salesforce. Nice little breakout move. If you're playing this to the upside, you have this highest close back since the beginning of June, so you're trying to play a breakout. I mean, as long as tech keeps running, your next target area, this would be, I'd have to keep a tight stop on this. Why? Daily and weekly cycles at the top. You got the above the 50, but look where the 62.5 is with the breakdown zone and your 62.5 harmonic and the 200. So my target area would be 196 to 197. So I'd keep a relatively tight stop in order to get risk reward, especially with cycles at the top on the daily and the weekly. Nice thing is you're a little ways off from earnings, because earnings aren't until the end of August. So that's the only challenge I have. I mean, your weekly, that was your weekly 200. Your daily 200's up here. But what the play that could be is a play to that weekly 200 to the bullish case with a little wider stop. And if you get the close above 62.5 and the markets keep running, then you can continue to raise your target using the harmonics. Or you watch for, if the markets rotate down, you watch for the pullback, the cycles to get back to the bottom, and then you play the rotation move back up for a return to that weekly 200. Oh, I love this. There are going to be so many good shorts coming up again. Workday. Out. There are going to be so many good shorts coming up. Again, your key support coming back about 150, 153.50 to about 155.50 is your support zone. Just broke above this little resistance ledge. You don't have a great clear path up here until it's virtually getting into that, but I'd be playing, if you're playing longer term, for about 169.50, this key resistance area with and my stop level. But that probably works. Yeah, that works with reward to risk probably. You might have to wait for a minor intraday pullback. My stop level would be below about 152.30. Little tighter stop there, but that could easily still run. And that stop takes you right below this breakout zone that based right along in your 4 hours. So I'd actually use that stop on a closing basis and a little lower stop for a walk away. And if people are wondering what I mean by a walk away stop, when I like to use stops on a closing basis. All right. Because a lot of times you get these moves. I'll just give you an example because I know we talked about crude. Well, look how many times crude even spiked above the rotation. We'll just use the bearish case. Spiking above the rotation zone but closing back down. Spiking above but closing back down a ton. Spiking above but closing back down. So if you're, and I don't care about the time frame. I'm just using this for instructive purposes. By waiting for the close, you get a lot more information. Now, what I mean by a walkaway stop is something you can put in and you can walk away. So if you're waiting for, if you want to, and that's more of a catastrophic stop. All right. So, like, if something horrible happens and you're not in front of your computer, or, because you're waiting for that close level stop, which you can't really put in a stop on the close. Like, you can if you have some automated trading stuff, but if you're just putting on like a stop with your broker, if your trading platform you have it running either through a server environment or on your computer, you can say if market is going to close below this, I would like to execute this price. So you can roughly execute it in the last minute of trading. But what I mean by a walkaway stop is if I'm going to be away from my computer and not have automatic execution, what level does it have to violate that's not close related? Okay? So you could use a harmonic as a walkaway stop. Yeah, it's a little worse stop, but you give it a little more room. You don't want to crowd a walkaway stop if you're waiting for an on-close stop. That's why I talk about on a closing basis stop and a walkaway stop. And I found from tons of testing, closed basis stops work a lot better. But it's handy to have walkaway stops should you have a massive something happen in the market and you want to be taken out. Adobe, again, another breakout play here. Fill in the gap nearly, not quite. Fill in the gap to the open, not to that close yet. Above the rotation zone. Longer term, this is going to be another rollover play. Your next target would be about 438 area. Your 438 to the upside, and you have this little gap to the downside. So depending on how aggressive you are, a 410 is a pretty key level. With the rising rotation zone, so you don't really want it to get much below this support level if you're playing short term. If you're giving it a little more room, if you're already in it and you're playing for that other higher weekly levels, then my key stop area on a closing basis would be down at 397 area. Why? You have the rising rotation zone, you have the hooking up 50. And let's just see, you could also run your short-term harmonics here. Your short-term harmonics here. And you look at that. You got the 62.5% harmonic. So that's a killer closing basis stop. If you were giving it more room. That's why I'm trying to teach people the tools so you can come up with, depending on your shorter term, you wouldn't want it to backfill this and break below this level. Little longer term, let's say you're in it from a much lower price, then you're going to stick with it and give it a wider stop, at least from my perspective. Hello, Pedro. Hey, Baxter the Boss. Uh-oh. Baxter the Boss is in the house, and Pedro. Thank you, for UPWK. Upwork. Would I mind talking about Upwork? Not at all. I don't mind talking about anything. I'm just looking to see if we have anything. I mean, Just seeing if there's any shorter term patterns. Not really. Up against your key breakdown zone. I'm just looking to see if we got some significance there. You have dueling significant levels here. Yep, those are your significant levels. And you have a little zone right here. 2 significant levels. So this would be, it just ran up into key major resistance. So if you're already long, this would be a great area to raise a stop. If you're not long, I'd need a breakout above this upper area about 2020 to play into this area. You're into a single path, clear path then. And on a single clear path, your target, your eventual target would be 2210. What you want to see for stop raising, see also you have that 37.5 harmonic right here. I love this stuff. Look at this. You got dueling significant levels. You got the declining rotation zone. You got the 37.5 harmonic lining up right at this level. So you start breaking above here. I'd be using the 50% harmonic on this little decline and the hooking over 50 and the top of the rotation zone as a stop raise. You could use 62.5 as another stop raise. 21.48. And then look at this. Breakdown zone from a single clear path move right in line with the 75 harmonic. But you get the close above the 62.5. This could be another stop raise then, or partial profits, and then you could target the 87.5, 22.81. And it just depends on how tight a stop. A walk-away stop would be, a closing stop would be 18.20. If you're giving it more room, if you were giving it less room and trying to play something tight intraday, your key level would be about 19.40. And that would be on a closing basis, on probably a 4-hour closing basis. If you wanted to give it a little more room, 19.25, 19.23. Because you get it back below that, I'd watch for a retest of slow areas. So that's how I would analyze up work. And longer term, if you want my long-term prognosis, bearish. Short-term prognosis, as long as we still stay with go-go markets, it can easily play that upside breakout. Let me know if I answered your question there, Baxter. Do you trade such markets? I don't know. Do I trade such markets? I trade things that move. I like to trade things that also, from a stock perspective, have earnings. Actually have a P to E ratio. But it depends what's going. Push consolidation is tough for trading. In this environment, it's a little tougher for trading. And again, it's the short term. And if you're talking about this is where I talk about 8 pushing the price. We got the little, here, let me show you with the 4-hour. Got the sideways consolidation. So you ripped away. Is this what you mean by push trading? Because I call this 8 pushing the price. People have heard me talk about that repeatedly. So you have this is a corrective move into the rotation zone. This is a sideways move. So at one point, you see, let me get these little tags out of the way. So imagine this. See how overextended it got from the rotation zone? Then it moved sideways, and you got 8 pushing the price, and you get the breakout. It's easier to trade that in a longer term bull market than it is in a bear market because you can get the fake moves. But recently we've been just in go-go mode in the lighter markets and there's no major topping patterns yet. So that's the way I trade push markets. Did UNG finish the cup and handle on the one daily chart, or is it in the cup and handle? That's. You mean this? Are you talking this huge thing? If you're talking this, yeah, people will trade that as a cup and handle. This UNG was a aggressive percent B buy today, coming back through a flag pattern, which was the cup on the cup and handle. So yes, that's a nice little resumption of trend on the upside with a very orderly pullback into the daily rotation zone. So yes, this is a valid thing. And again, you're going to want to follow up, especially with the close above about 29.50, because then that really focuses on the most recent high prices and the breakout levels. Do you think statistically Amazon will move to the 200 SMA? Statistically, well, we have to look at the levels. If I'm going to let me reverse these for the short term off this last swing, let's just see where we sit from the last swing. Well, you're in the major rollover zone. Let me pull this off the shorter term, okay? You're sitting against key resistance on the push higher. You could easily connect, and I'd just be watching this a 144.75 area. So this is the key area I'd be watching. So yes, is there anything that statistically so far this is a recovery, and your 200 SMA, which is an area, is right there. So I'd be watching anywhere in here for a rollover, a potential rollover play. But again, I can't get bearish until it starts breaking down from here. Unless I get a shorter term topping pattern, which we already looked at this, which I don't have yet because this was a little, again, remember what I just talked about. Another great example. Sideways consolidation, 8 coming up to push the price to breakout play to the upside. Is this a potential double? No, I'd just be watching a breakdown from this horizontal consolidation. What about Palantir? It's sitting at the top of the channel now. Your next targets, I mean, hold on, let me get to the reverse harmonics. Hold on. So it's sitting here. I'd be watching for, on a market pullback, 1060, your 50% harmonic, and your breakout zone and the rising daily rotation zone is about at 1065. That's key support at this point. What you don't want to see is a move back below about $10. If you're in a bullish case, you're getting to the upper end of the channel line, which, you get some back and forth trading, but your key level, if you're going to keep playing it higher, you need to close above 1170 roughly to then play statistically for the higher prices. And you're above the flattening out. So it's technically a neutral long term. And interesting enough, if you get above that 62.5, your next, that would favor a return to the 87.5 harmonic, about 1375, and you need above that on a closing basis, that 62.5. But that also favors the 50 week and the end of this. This is an advanced. Is that advanced? Yeah, it's pretty much an advanced clear path move. And this is the target area. Again, you start getting the key closed. Keep an eye. I'd be watching for at least a pullback, a little pullback play to get reward or risk a little better, but you don't really want it closing back below the daily rotation zone in the channel, because then I'd be watching for the lower end of the channel test, and then if that doesn't hold, for a longer term rollover play, so you can keep a stop there. Again, Rich, I talked about this. They're shrugging off. I mean, the Fed, this is where I think the Fed's lost complete credibility, because now they're trying to say, hey, this is what we're actually meaning, and the market's just completely ignoring it. So I'm in the book that the Fed's lost credibility. Do I think they'll continue hiking? Yes. Do I think the market's buying it? No. Yeah, I saw that. No. And again, they even Cash and Carry said, he sees a pause before rate cuts in 2023. Not cuts, but a pause. Now, but he also said he made the most idiotic statement today, Neil Kashikari. He said, you could. I'm paraphrasing it. Some say you could still view as inflation as transitory. Yeah, on like a 100-year cycle, but that's an absurd statement. This is what you get in bear market rallies. Again, there's lots of money sitting there. Stock buyback windows got opened up. There's lots of money being put to work. That doesn't mean the money's right. That means there's a lot of fund managers starting to chase returns because they were down so much throughout the beginning of this, through the first 6 months of the year. You got a lot of fund chasing right now. Maybe Twitter will reach 54 before the courts. What's my mama Kathy doing? Your mama Kathy. Remember, we had the double trigger. Still climbing. Do I know if it'll work? No, but you got to go with the probabilities. I'm really focused on this first target area. So it's still climbing. The junk is bouncing back. Look, we're in full junk mode. Most shorted stocks are up 11% over the last few days. It's, again, we're buying. It's not even like you're buying just mega caps have, especially today, were a big player, but you're also buying the junk out there still. I'm glad. Hey, Baxter, you know what? Consider joining us more often. And again, thanks, Dimitri, for coming back. Balaji's here too. I really appreciate new people here. I appreciate the regulars, but I get to talk to regulars every day. Shop breakout. Remember, you still have a gap. The gap fill to the open would be my first target. You have this daily open. Again, you're breaking out, shrugging off the bad earnings. Again, we're in here. You have the gap fill play to here. My target for the gap fill play first would be 40.77. If it did continue longer, the full gap fill play would be to 48.55. Doing your breakout play right there. So on a pullback, this is at the tops. You really don't want to see it getting a close back below about 38.50. You'd prefer it on any pullback to hold this 40 area. And then you got that play to the upside. That's the big play to the upside right now off that breakout play. And you see here this gap this gap that's left behind still is roughly your 37.5% harmonic. So you do have upside, continued upside. If you're using a wider stop trying to stay in this longer, but you'd have to already be long, I would not want to close back below 36 on the larger time frame perspective. The short time frame would be back at 40. The long time frame would be that 36 level, depending on your time frame. Coin. Again, another breakout thing here. You got this to the upside. I'd be watching this key gap low with the top of the rotation zone. 96 on a continued rally. Your pullback area at this point, short-term pullback is about 76.50. This level I would pull off at this point, where you don't want to drop it back below, depending on your time frame. Again, where you don't want to drop it back below. Worst case is 56.88 longer term, but short term, I wouldn't want to see it wipe out this key low and the 37.5 harmonic about 67.70. Now, if you want to use, this is another great area to fine tune your levels using the forward harmonics. So stop raise 86.63 area, which is roughly corresponding to this high, and then target area 93.94 to 95.65. If you're then playing above there, the next key area would be to this key gap close, which would be 103.74, but you're going to have some major resistance right at that 100 mark in front of that. The bottom indicator is a stochastic RSI combo. It's better for cycles. The top is an RSI. This is %B. This is stochastic RSI. It actually works better than stochastics, and it's really nice for doing cycle analysis. You're welcome, Dr. M. You're welcome, Connor. Are there any potential value in the consumer staples? I have not found anything that from a long-term play. I'm still looking. That's the problem. There's not a lot of value that's value. It's the other problem I'm seeing. I mean, this is the problem with this market. I mean, I don't really want to look. Consumer staples is something like Coke. Look at its P to E. If you can read this. Almost 29. 29 for Coke. And it's not a good play where it's at, but I'm just giving you an example. You know, that's not a great value play. This is where even the stuff that's supposed to be consumer staples value plays is ridiculously. They're not growing earnings that fast in this environment. See, this is where we're absolutely at the absurd level with everything still. By the way, occasionally I tweet stuff out on my personal Twitter. If you don't follow me personally, you might want to. At MG Arnold. Mike G. If anybody knows what the G stands for, I know a couple people do. It's my middle name. ARNOLD. I tweet some stuff about valuations and other stuff. We're still, I'm not going to get into it here, but if you want some more of my personal thoughts, not necessarily path thoughts, but more of my personal thoughts, those are the kind of things you should look for. Hey, you're welcome, Anissa. I hope you have a wonderful rest of your evening. You're welcome, Balaji. Again, anybody new here, please do consider subscribing and checking us out on a more regular basis. I am here to help people, literally. That's what my role is. You're still looking too? Again, That's why I need to wait for another decent sell-off. Anything right now is not long-term value. Anything now are short-term plays. They're like swing trades. And if anybody doesn't know what a swing trade is, it's for me, it's like could be a couple days to a week or two. You know, it's nothing I want to sit and invest in for a long time. Hey, thanks for the super chat, Josh. Hey, Mike, does a daily gap up reduce probabilities on a triggered weekly double bottom? SoFi, for example, I have to. Does a weekly gap up reduce probabilities? Oh, a daily gap up. No. No. The probabilities are going to be the same on that. It actually gives you a nicer area to use it, depending on the time frame you're playing it. It gives you a nicer area, though, to use a tighter stop if you want. Why do I say that? By the way, keep in mind another area if you're playing the shorter term. Use these key gaps to the upside. Josh, you see this gap? That's a great level to raise a stop. Great level to raise a stop. Another key area. So you can play this. Why do I say that's a great... It's actually a gift, that little gap up. Why I view it as a gift? Because I can... Look at this. You got a breakout gap up bar, right? You get below here, what's the probabilities pretty much? And we can put up the gap harmonics, which will help define that. But look, I don't even, here's the 62.5, it's even in front of that, but I just still use that low for a stop level. Why? Because then you favor. So if it's going to break back down below here, do I want to ride it back down here? No. So I can even use a tighter stop than normal on this double. That's why I really like stuff like that, because it gives you probabilities that, hey, if you not only do reverse this whole bar, this breakout bar, and get below key resistance becoming support, you then favor the gap fill play. And then as you go up and hit these other gap fills, you know, you can start ratcheting up your stop to below some of these key support levels, depending on your time frame, and trail. So no, it doesn't change the probabilities. Hey, you're welcome, AP's World. You're welcome, Eric. Looks like we're at 38.2. Again, I don't use the fib levels. I use the harmonic levels. And right here, you see this red line was a 37.5% harmonic. So we just hit that. So yeah, you're roughly at the 38.2 also. This next red line is 50. This next red line is 62.5. You are welcome, Josh. All right, we've had a really long session that's going on an hour. Hope I helped some people and hope you learned something from this. Again, come back, please, and leave some comments, especially if you learned something. Yes, crude oil did close the gap. I don't know if there was a full close to that close, but it's virtually there. Again, there's now just short-term breakdown plays. With that, I'm just going to wrap it up for now. Hope everyone has a great evening. You are welcome, Paul. Again, I'm going to say it one more time because I really want to get subscribers there to 5K. If you're not already subscribed, please do consider subscribing, especially since we're here to help you learn and teach and field questions and hopefully give you information that you didn't get from another channel. Hey, Sonny, thank you for being here. Thanks for Thanks for the comment. I'm seeing new people here. This is fantastic. I really appreciate everyone. With that, I'm going to wrap it up for now. Have a wonderful evening. I will be back at 8 a.m. tomorrow. Remember, 7:30, you got jobless claims. Unless that's a really big beat or miss, I think the market will shrug it off. So that's the big thing in the morning. So just don't forget that. Until then, I will talk to everyone later. Bye for now.